share. So while I just get to the beginning. So from my side, hang on, sorry, let me just get the screen up. Great. Can everyone see that? Yeah?
Okay. Yep.
Wonderful. So hi everyone, my name's Emily Barron. I'm a project leader with Open Capital Advisors. We are a management consulting and financial advisory firm with offices in Lagos, Nairobi, Lusaka, and Kampala. And we do work across a wide variety of sectors, but with particular specialism in energy and understanding how to accelerate investment into off-grid energy markets. And I led the work doing the market assessment for Sierra Leone. And my colleague Ivy, who I'll just ask to introduce herself now, was leading the work on the Nigeria assessment. So Ivy, do you want to do your introduction, and then I'll jump into the presentation? You're on mute. Yeah. Okay. We still can't hear you, Ivy.
Can you hear me now?
Yeah.
Yep.
Great.
Sorry about that. I was saying my name is Ivy Akumo and I'm a senior associate at Open Capital. I was supporting with the development of the standalone sector assessment for Nigeria. And my background is primarily focused on strategy and capital raise support for SMEs while working at OTA.
Great. Cool. So hopefully everyone can still see my screen. It looks like it's disappeared.
No, it's still there. I can still see it.
Okay, great. So we're just gonna zoom in a bit into what we found looking at the investment landscape for accelerating investment into, or the landscape for accelerating investment into the standalone sector in both Nigeria and Sierra Leone. So I'll be covering off points particularly relating to Sierra Leone, and then hand over to Ivy to speak to Nigeria. I think what we have also found is that there is, although the markets are very different, there are some interesting kind of similarities between the two. And so particularly when we speak to the barriers to investment and our recommendations around how different groups can kind of act to accelerate investment, we do see quite a lot of similarities across those two. So jumping first into Sierra Leone, yeah? Oh no, sorry, there was a feedback from my side. So first looking at Sierra Leone, the graph on the left-hand side shows the amounts of capital flowing into the sector, and the far left-hand side bar is showing where the money is coming from, or the capital is coming from. And then the far right-hand side, so technical assistance, commercial capital, policy, subsidy, etc., shows where that capital ended up, or the sort of the form it arrived at. And so what you can see from this is, not that surprisingly, the bulk of the around $43 million that have been invested over the last 4 years has come from development partners. A large amount of support has come from FCDO, including the ACE-TAF program, and then the Energy Compact that sort of preceded it. And there is and then a small amount that we've categorized as sort of policy subsidy, which relates to the tax exemptions for SAS products, comes from government. And then we do have around a third coming from a group we've called impact investors. But that money, you'll see on the right-hand side, is almost all of it is going into what we describe as international companies. So companies either with an international leadership or those which are headquartered outside of Sierra Leone. And there has been a few large players that have really monopolized that equity and debt capital. Banks so far have played a really very small role. There has been some quite exciting partnerships with one local bank looking to help them sort of on lend, providing that upfront capital to then provide on lending in local currency. But as we will see as we go into the barriers section, there is a real challenge around accessing local currency capital. And for leasing models, for pay-go models, that local currency capital is really, really crucial. And there has, as ever, always been some really interesting innovations by the more advanced SAS companies in Sierra Leone in response to that restriction, and so finding other ways to find financing and other ways of sort of providing that leasing facility. So right now, we estimate there are about 152,000 SAS systems in use, although this is probably a confident Sorry, say that again.
No, sorry, go on, Emily. I think,
okay.
Yeah, go on.
Okay. I think what I will say is about providing any of these types of numbers is that the data landscape is quite challenging. And so the numbers that you see individual companies reporting versus what we see from Gogla, that there's very little correlation between the two. So we've done our best to sort of provide an estimate based on historical Gogla numbers and sort of comparing those to what we see individual companies reporting in terms of their sales. But I think this may be an overestimation when you think about numbers of systems actually in use, and maybe more similar to the number of systems ever sold. So take these numbers with a little bit of caution. But I think as we think about recommendations, a key point for us is to think about how can we work with, partners like RealSol and others to try and help improve that data landscape. And there have been some interesting initiatives by Energy Dev to try and make some headway there. So I'll hand over now to Ivy to take us through the landscape for Nigeria, and then we'll compare the barriers and recommendations for both countries.
Thank you, Emily. Moving on to the next slide. So compared to Sierra Leone, the Nigerian SAS sector is quite large, with a significant number of investor types and also SAS player types. As of 2019, it's estimated that about 1.8 million SAS products were in use in the country. And needless to say, such growth has attracted significant investment. Between 2015 and 2020, we were able to identify investments of up to $227 million. A lot of the investments are coming from DFIs, governments, and large state investors who accounted for about 54% of the total cash flows into the sector. And most of this was coming in the form of debts, primarily because the debts are of large tranches compared to the other types of investment instruments, that's equity, grant, and mixed instruments. And the largest recipients for these were international companies who tend to have a proven track record and have won over investor confidence. Local companies on the other side have had some trouble accessing capital, but both international and local companies speak about limited access to local financing. Nonetheless, despite all this distraction, the companies still cite access to credit as a critical setback in the ability to attain operational scale, particularly because the market potential is around 1.2 billion in terms of revenue, but they are yet to achieve that level. In the next slide, we'll go through some of the barriers we've seen in the market. And as Emily mentioned, these barriers are cross-cutting between Sierra Leone and Nigeria, in the sense that there are evidences of both in both countries with regard to the SAS sector. When we speak of supply-side barriers, we're speaking about barriers to investors investing in the SAS sector. The one major one that came across was unstable macroeconomic environments that have increased the country risk profile. In the case of Nigeria, this is primarily due to the forex or Nigeria currency value, which has fluctuated substantially over the past years, primarily due to oil prices. An example is in 2020, just the past year, when the currency value dropped, which made hard currency less available in the market and also resulted in high cost of financing in hard currency. And as a result, it's making the investment opportunity unattractive for foreign investors who want to invest in hard currency within the country. The other challenge we saw or that was cited was uncompetitive financing terms in the SAS sector. And this is primarily because of dependence on concessionary capital from DFIs and government. And that's the case mostly in both countries. So what is happening is these DFIs and government initiatives are providing very competitive terms that make it not less lucrative for commercial investors to get into the space because they cannot compete, and SAS companies do not have incentive to go for commercial rate investments. The third challenge that we had from investors investing in the market was due to high perceived risk of the SAS business model. There's still limited understanding by investors on the structure of the SAS businesses. Some are perceived to be high risk, particularly around, say, the cost of equipment to consumers, in the sense that they believe that this equipment are too costly for consumers to purchase. Others express less confidence on the payment systems that are in place, and largely around the ability of the businesses to collect receivables and meet back their payments. So with regards to investors, these are the main challenges cited across the investors that we spoke to in both countries. On the demand side, consistent with narrative we've had before, many SAS companies are still not able to raise capital and do not have the capacity to absorb them, primarily around the governance structure, the operating model, which has made it very difficult for them to go out, approach investors with clear financing need, as well as an articulate narrative on how they intend to repay back the financing. The other challenge that we have seen or heard about is around limited local currency financing, specifically in Nigeria. And as mentioned before, this is mainly because of the risks around FX and also because of the perceived risk in the markets by investors, local investors who do not understand how the market functions. And in alignment with that, they're also
during the concluding remarks, please put the link for the I'm sorry.
Okay, sorry there. In alignment with that, we've also seen that there are few FX hedging models that allow them to take local currency financing. To add one last point around local financing, because of the limited local financing, wherever the SAS companies are able to access local financing, they always come at very stringent terms and high collateral requirements that make it also difficult for them to access that. The other large barriers, category of barriers, were around policy and regulation. One of the main ones was unfavorable fiscal policy, increases on product prices that reduce affordability and market penetration. And this one is mostly in regards to import duties on certain parts of the solar equipment that increase the cost of the equipment to the consumers and therefore reduce market uptake. There's also a question on limited implementation of historical regulation. Both Nigeria and Sierra Leone rank very, very low in the regulatory indicator for sustainable energy exercise that is done by the World Bank. They rank as the bottom 50 in this case, meaning that there is a gap there in implementation for energy policy. And the third one being regulation that limits the ability to consumer success payment platforms. And I'll use the case of Nigeria, for instance, where mobile network companies are not allowed to extend credit to consumers, as we've seen countries in East Africa do. But this has been mitigated to some extent with the establishment of public service banks, and hopefully that will be able to bridge the gap of providing consumer financing to last mile distributors in rural areas. Going to the next slide. Despite all these barriers, there are some efforts that have been made in the market to catalyze investments, and it's good to recognize those because they have spurred investments so far. And these are mostly done by government and development partners. One through technical assistance and capacity building for both investors and companies. Examples include the Nigeria Electrification Program and the Rural Electrification Fund in Nigeria that have set aside almost 40 million for technical assistance, $40 million that is, for technical assistance to ACS companies. We've also seen development partners do capacity building for investors, for instance, USAID and IFC, providing capacity building for local financiers to understand the ACS landscape. And a third way that they are providing technical assistance is through incubation hubs such as for Olon that provide accelerator growth support. A second way they do this, the second way they catalyze investment in the sector is through stakeholder coordination to increase collaboration. An example is the REA in Nigeria that holds quarterly meetings with all stakeholders in the country to understand what work they are doing and to identify potential areas for collaboration and to reduce duplicative efforts so as to catalyze investment and growth in the sector. A third way is through concessional capital to crowd in investments, and we've seen this come in the form of lines of credits and even guarantee programs. For instance, the USAID guarantee to EcoBank that was meant to reduce collateral requirements and enable access to financing for the SAS companies. A last way that they are doing this is through policy and regulation to create an enabling environment. Some of them include tax breaks on foreign investors, for instance, withholding tax on certain types of investments. Others include creating regulatory standards on the quality of SAS companies to generate comfort for consumers as well as investors on the quality of products being traded. And more recently, as part of the Economic Sustainability Plan for Nigeria, commissioning the 5 million solar connections program that will spur both growth within the sector as well as attracting financing in the sector. These initiatives, while they have catalyzed investments to this point, they still need to increase more efforts to create an enabling environment and to increase the investment flow into the sector, mainly because the market potential in both countries is quite significant. And I'll pass over to Emily to walk you through some of the recommendations which you thought would help spur investments further.
Thanks, Ivy. Yeah, absolutely. So we're going to go through the recommendations sort of actor by actor, if that makes sense. So starting off, and I'm sure we'll come to this more in the breakout and kind of discussion, but starting off with government and development partners. In both of these markets, there's still kind of a huge role for these actors to play. I think on the government side, we're looking at things like reviewing fiscal policies to increase sector attractiveness and macroeconomic stability. Certainly in Sierra Leone, we're excited to see the results of an upcoming study on the impact of the current fiscal policies around SAS products. And I think that will be a really interesting case study to then demonstrate the value of those policies, hopefully beyond just Sierra Leone, but also providing kind of longer term support for those within Sierra Leone. Also thinking about subsidies to increase penetration and therefore performance of SAS companies. And certainly when we look across, the price of energy and where subsidies do come in the grid as a comparison, subsidies definitely do have a role to play for SAS and need to be thought about quite carefully to make sure that they're sort of effective, but we definitely do see a role for them there. And then thirdly, on the government side, thinking about how can we increase the number of third-party providers for payment remittances as sources of third-party asset financing. So, for example, we see things like very early stage efforts for mobile companies to thinking about using SAS actually as a lever to increase mobile money uptake, but also thinking about what are the restrictions around MFI providers to allow them to also have the liquidity to kind of become a player there as well. On the development partner side, I think that, as we saw in Sierra Leone, there's been a huge amount of support for on the technical assistance side, and I think that will still be a role that continues to be needed. I think we've looked at the market making activities. We're now really thinking about what do the individual companies need to become sort of investment ready. Some of that will need to be really targeted towards local SAS companies, perhaps those that are family owned, perhaps those that have traditionally grown through just cash sales rather than kind of taking on the risk of any sort of financing, and helping them sort of get up to speed on things like governance and the different types of capital available, as well as providing kind of network convening opportunities for them with investors. And then again, concessional capital, so things like results-based financing, blended finance, guarantees and fast start facilities, as Ivy kind of alluded to, they will continue to be very important, especially in the more nascent markets, the markets with currently quite low energy demand from consumers. And then, I sort of mentioned it a little bit in my introduction, but there is this very important role to play around data and improving the quality of data and the transparency of these markets. So making sure that SAS companies and investors really understand how these markets are functioning and have kind of comparables, etc., as they make investment decisions. So moving on now to the investors and the companies themselves, definitely, really at the core of this. So once we've, if the government and the development partners are thinking about sort of the enabling environment, we're now starting to think about both the demand and the supply of capital. So on the supply side for investors, investors will still need to play a significant role providing technical assistance. And I think working in partnership with local industry bodies, they can provide a really useful role in sort of giving guidance on what types of technical assistance is most needed, where are going to be the major gaps in what they're seeing in terms of as they look at their investor pipeline. They are going to have to think sort of creatively about what types of financing are going to be right for different SAS companies. They are going to have to think about what does collateral look like? How can they, for example, securitize receivables, which will be very important for those with leasing or pay-go models. And they are going to have to work in partnership, both with development partners, but also we hope, we would love to see also kind of increasing participation by local banks, local financiers, to help provide that much needed local currency financing. On the company side, I think across the board, both those who've raised capital, those who are looking to raise capital, those who maybe haven't started thinking about it, there is still a role around building that internal capacity to raise and then also manage that growth post-raise. So that will include things like having really transparent financial management, being able for someone external to be able to come in and evaluate that historic performance. It also includes operations management, business planning, marketing, etc., and really understanding what's needed as you go into that capital raise process. So that includes investor materials, includes kind of having a strategy around fundraising. And then really, as we've talked about quite a bit, and Karen kind of talked about in her presentation, it's going to continue to be a very volatile situation, a very volatile kind of market. And so, that ability to react and adapt to prevailing market conditions will continue to be really important. So just to kind of sum up, and then I'll hand over to Chibukum, I think, to then speak to Sagan. So we are going to we have these two reports. We have the market assessment for both Nigeria and for Sierra Leone. They are on the point of being published, and so we will be disseminating those through email, through social media, and also in country as well via the two country managers. And so, you know, please do reach out. Our contact details are there if you'd like to hear more, and also look forward to hearing your reactions once you've also been able to read the reports themselves. So, Chibukum?
Yeah, thank you very much, Emily. I just noted down some questions I'd like to ask you. So just, I would like to move over to Shegun to just quickly in 5 minutes as well, just speak more on, you know, from the industry, from the private sector perspective, how you've been able, in terms of the investment and financing landscape, especially in terms of the investment readiness of companies. But if you can just share your thoughts from the industry association on investments in Nigeria, just quickly in about 5 minutes. Then I'll just go into ask a few key questions, and then I'll open it up to the audience to ask questions. So Shegun, over to you quickly.
All right, thank you so much. Good afternoon, everyone, and thanks for the presentation. Okay, so I'll just quickly give a brief perspective about the Nigerian market, and I hope you can hear me clearly.
Yes, we can.
Right. Okay. So, so basically, I mean, from the presentation that has been made, it's clear that local companies have some challenges in raising funding. Most of the investment that has come to the sector has gone to, the international companies. So basically, some of the ways that we've been trying to cope is, number one, having a very strong industrial body. For example, RIAN is a very strong body in the region, and we're also trying to also do the same thing across West Africa. So we're spearheading the setup of the West African Renewable Energy Association. I mean, that's the topic for another day. Right now, so basically, we try to together form collaboration and partnerships with the relevant stakeholders that can make things happen for us. We know the challenges that we face in raising funding. For example, most of the companies are fairly new, maybe average of 3 to 5 years. And they are still a bit small, so they can be compared to the international companies that have wide experience in other markets and large, investor profile and confidence. Okay, so what we're doing is saying together as a body, how can we promote collaborations and partnership amongst us? I'm aware that a few companies under RIAN are talking about a consortium already to say, look, is it possible that we put some of these companies together to form a larger body, ride on total experiences, and see how we can raise funding and make us attractive to investors. We're also working a whole lot with development partners. I mean, like, for example, A-Staff, and I must say thanks to Chibu for all the support, to see how we can make companies investor ready, how their capacity can be built, how they can basically do things like preparing, a business plan and a strong business proposition that investors can look at, how corporate governance can be strengthened. And I know that a few companies in Nigeria, for example, that have strengthened their corporate governance structure have been able to raise funding. I mean, the likes of Energy, GV, and some other names. Okay, so that's some of the coping mechanisms. We're also trying to, as a body, engage with government to see how the policy framework can help, to de-risk the market and make local companies interesting for investors to fund and invest in. For example, several members of the association in Nigeria, they're getting support from the Private Finance Advisory Network in terms of coaching, business development, and the rest. We're talking to get investors also to get that kind of a support to ensure that our companies are investor ready and investment ready. Right? Okay, so and then also a whole lot of engagement with development partners. So most of those companies right now, what they're trying to do is, basically at the seed stage, partner with the likes of Olon for some, some grant funding, do some form of bootstrapping, engage with government, like agencies like REA, for some support and some result-based financing, and basically just to raise some funding for their businesses. But we strongly believe that the outlook is good. We've seen local companies do some funding that we thought might not be possible before. I mean, Energy raised about $9 million, and GV has also done some good fundraising. So we're trying to ride on the experiences of such companies in the association. So most time we even organize meetings amongst ourselves, get some of our members who have been able to raise funding to come and walk other members through how they can do that also. And also see, I mean, Nigeria market is one of the biggest in this region, if not the largest, over 100 million, not connected to the grid. And so standalone system is a good fit for businesses. And the final one, we have been trying to engage with, financial institutions locally in Nigeria, because we believe that they have very strong portfolio to and capital base to fund the market. But we noticed that the banks are still not familiar with the sector. But gradually we're getting some interest in some banks, a few banks, about 4 or 5 of them, already doing some form of lending to SMEs and also for productive use of energy. And recently, the foremost development financial institution in Nigeria, the Development Bank of Nigeria, is having a very strong interest in coming to this space. And basically, they want to take that lead of almost becoming the green bank for Nigeria and focusing on MSMEs. So lastly, while I wait for questions, we believe that with a better enabling environment in terms of policy and regulation, increasing standards of technology that are deployed, we feel that the market is gradually ramping up and it's about to take a flight. And we believe that if banks can finance, generators, and they do that a whole lot, they finance a lot of generators. So if banks can finance generators, what's the difference? How can we take that same model and replicate in renewable energy, and it becomes easy for banks to be able to finance it? So we are excited, and I've also taken a look at the map that is developed by A-Staff. I mean, I think it's very good. The bottom line is to see how we can connect investors and investment. Companies that are looking for funding, and bring them together on our platform, because we keep hearing companies for investing, and then we have a lot of companies looking for investment, and just a missing middle that we need to bring together and connect. And I believe events like this, the work of A-Staff, the map that is being developed, to bring that to bear and make that happen. Thank you.
Thank you very much, Sheikh, and thank you very much, Emily and Ivy. So I'm just going to ask each of you just one direct question, and then I'll just like to just move closer to the audience. Sheikh, since just picking up from where you stopped, I think from the presentation that Emily made, one of the key concerns for investors is companies are not investment ready. And if you look at the impact of COVID-19 over the past year, and the hesitation by investors to deploy capital, why still saying, well, we have some capital, but the companies are not even able to absorb this capital. So just recognizing the fact that most of the companies are mostly international companies, but for local companies, what is the issue really? Because I would think at this stage, 5 years into the sector above, things like governance structure or business plans would have passed that stage. So what is really the main issue in terms of companies being investment ready? Because on one side, the investors are saying we have the capital, and the companies are not ready, and then the companies are saying, well, we need capital, we need financing, but it's not coming. So what is really the issue? Just quickly in about 2 minutes, please.
All right, thank you. So from my own experience, I think a few issues, but let me narrow down to 1 or 2. Number 1, yes, proper structuring of some of the companies, some of the local companies, it's still highly required. So issues of corporate governance, proper financial records, maybe deploying appropriate technologies to enhance their businesses is still very needed. Like I earlier mentioned, most of those companies are still small size. So we are looking forward to a situation where we have 2, 3, 4 companies probably pulling, resources together and forming a consortium and SPV, probably almost maybe merging. I mean, we saw that happen in the banking industry in Nigeria, and then we form a big organization that investors will be interested in taking a look at. So proper structuring is still very important, and it also includes business planning and business modeling. For example, some of the investors that we come across will say, look, I want to be able to see the trace of my money, where am I investing in, how do I recoup, what's the exit strategy, how do I get my money back? And we found out that technology has played a very key role in the very Pico solar solution, where you have pay-as-you-go systems that can easily be monitored, and then you can do refinancing of receivables. But in the medium-sized companies, that has not happened. Okay, so and also finally, the ticket sizes that most of the Nigerian companies, local companies let me use that word, are looking for, at times is not interesting to the investors. So a company, I mean, let me use my company as an example, that has just been able to do some seed funding, friends and family to seed, and then looking for growth capital, maybe in the range of $5 million. But an investor says, look, I need a company that needs about $20 million at this point. I don't have time to, it's the same effort I put into running after you that requires $2 to $5 million US. The same I put in a company that needs about $10 to $20 million. Okay, so that is still that issue that we're facing. So the ticket size also is a challenge. We're getting over the issue of foreign currency, because I mean, we've seen some of our members raising local currency and trying to do some hedging and cover that the risk. Okay, so but like I earlier said, we're seeing that coming together under RIAN, we're engaging with partners, developers, investors on how we can close this gap and make investments happen in the Nigerian market.
Thank you very much, Egan. Emily and Ivy, I think just one question, and any of you is free to answer. It's so looking at, I think this is all drawing from what Harry had said in the beginning. With the impact of COVID, there is this concern around the slowdown in terms of investment, especially foreign investment, which has dominated this space. And so in the situation where we're looking at lesser funding for companies, how, what basically would be the coping mechanism, or how should local companies go around this, especially alluding to what Shegun said about local financing? How should we be looking more at local financing now, and how do we actually go around to bringing out a much more local financing as the market matures to help companies like that of Shegun's? Thank you.
Yeah, absolutely. Maybe I can kind of kick us off, and then Ivy can jump in if there's sort of additional points. I mean, yeah, it's tough, right? And I think especially for these, earlier stage markets, where the development partner money and government support is so crucial, it's particularly tough. It feels like we're just at the start and been hit by this sort of brick wall, which is really hard. But I think what's really interesting is also how you have sort of almost when it's forced upon us, we then create these really interesting innovations and interesting kind of through necessity, we then get these sort of new partnerships, which is super exciting. And, just to kind of pull out a couple of examples, I think we, do have sort of a variety of different sources of donor funding. So perhaps some of the more traditional kind of bigger players may not be there or may be slowed down for various reasons, but there are kind of a real plethora of other smaller grant funding organizations who are really keen to step into that sort of COVID gap and sort of provide bridge financing, et cetera. I think, and then I think there's also interesting initiatives coming, not necessarily from the financing side, like, for example, in Sierra Leone, we've seen some of the mobile companies stepping up and creating energy companies as a way of almost accelerating mobile money, which is really interesting. So creating that demand themselves for mobile money. And so I think, also, some of the best financing is also just your revenue stream, right? So finding other ways to find those revenues and provide access to energy. I think one other example we've seen just on the local financing side, which I'm super excited by and I really hope is replicated elsewhere, is a bank in Sierra Leone that actually received a loan to then provide on lending. So they had a specific facility just to provide support for asset financing for SAS. And that was a very niche but kind of really exciting option to try and break down some of those traditional challenges around credit scoring, et cetera, that we often find when we talk about local bank financing and SAS companies. Ivy, I know there was a couple of examples from Nigeria you might want to share.
Yeah, thanks, Emily. To echo and to add on to what Emily has said, in the case of Nigeria, these pre-COVID investment pool of funds that are yet to trickle down to the SAS companies, and primarily from donor programs that the SAS companies could still strategically position themselves to tap into. In addition to that, within the Nigeria space, we're seeing a lot of interventions coming through, both from the government, development partners, as well as investors. For instance, the OLN has created a facility that's collaborating between SAS companies who are interested in providing solutions to the healthcare sector. Also, the 5 million Solar Nigeria program, as part of the Economic Sustainability Plan, is a tactful positioning for the SAS companies to attract financing by sustaining and continuing the operations around that. We've also seen some lenders providing concessionary rate capitals. For instance, the Bank of Industry has reduced its lending rates to about 5% and providing long-term loans. So that there are a couple of avenues through which the SAS companies can still find financing, granted that it may be a little bit difficult within this period. That said, it's still crucial that the companies still work on their ability to raise financing, that is, prepare the internal capacity to raise and actually absorb and manage and repay back the financing.
Thank you very much. At this point, I'm going to open up the floor to anyone who wants to ask questions. Just kindly raise up your hand, and I would unmute you, or you can unmute yourself and ask questions. Sorry, you can also leave your questions in the chat box. For some reason, I'm not really seeing my chat function is not opening, so I would encourage anyone to just raise up your hand and ask any direct questions to Emily, Ivy, or Shegun. While I go back on some that I have. Yeah, thank you. So just raise up your hand and I will unmute you and then you can ask your questions. Okay. Sharif, I think you can unmute yourself and ask your question.
Good afternoon, Chidike. Good afternoon, panelists. My name is Sharif Mohammed. I work for the Links program, and I manage the renewable energy component. My contributions will be more on the demand side, which is beyond raising capital for renewable energy projects. What is the view of the consumer? Assuming it was affordable, is it the choice form of energy? Would people want to pay? Can economies of scale and scope bring the Naira per kilowatt hour down? Those are the challenges that we need to work with. At the same time, we're trying to improve the business plan, get the thing ready. It's also about the perception of the consumers to know that it can actually eventually be cheaper. That's my contribution.
Thank you very much, Sheriff. So I think that's more of a contribution than a direct question, unless maybe Shegun or Ivy or Emily, you want to add to that before I take the next question.
Okay, so I can just jump in briefly here. Thanks, Mohammed, for that question. So my experience in the market deploying standalone system shows that the interest of the consumers is, getting higher, especially in Nigeria for some reasons. Number one, The grid is becoming more expensive, so there are constant review of grid prices. The subsidies is being removed from petroleum products. That is the major alternative for powering their businesses and their homes in terms of generators. So what, for example, the business model that we are trying to showcase is that if I provide an alternative that is almost equivalent or most times cheaper than what you are currently spending to power yourself, and I can guarantee more time of energy, more number of hours. Okay, and it's cheaper than what they're currently spending on the alternatives. It becomes a good option, and we've seen several consumers, taking on these solutions and demanding more. But the challenge has been, okay, the capital to scale. For example, we're working with some number of SMEs in groups and associations in large numbers. Okay, but they want the facility to be for a number of years, maybe 3 to 4 years, or probably 5 to 6 years. But you have, there's also a mismatch because banks says, look, I can't do more than 3 years, at most 4 years. So that's just the gap that needs to be closed. So if companies have access to capital at a good rates, with good technology to monitor repayment and ensure your money comes back, I think the market is ready and consumers are taking on these technologies almost every day from my own experience. Thank you.
Thank you very much, Shegun. Please, like I mentioned before, for some reason I'm unable to view the chat, so just kindly raise up your hand so you can ask your questions directly.
Chibuke, maybe I can add something onto that, just adding on what Shegun has shared. There are also opportunities to increase affordability for SAS products within the country, and we alluded to some of them during our presentation. One of them is revision on fiscal policies, particularly around taxation. For the VAT of SAS products, it's currently at 7.5% in Nigeria, as well as import duty for the parts that are imported. So revising those could substantially reduce the costs to suppliers and eventually trickle down to the prices sold to consumers. We're also seeing some supply side subsidies coming in. For instance, the Nigerian electrification program is supplying results-based financing, which could also help reduce the costs to the suppliers and then ultimately still trickle down to the consumers. There are also still opportunities for demand-side subsidies that could be structured by the government as well as development partners. And these are initiatives that will definitely encourage so as to reduce the costs to the supplier and eventually help the consumer afford the SAS products more.
Thanks a lot, Ivy. I have Andrew. So, Andrew, you can unmute yourself and ask your question.
Thank you, thanks. Panel, I'd be quite interested to know, we talk a lot about the cost to consumers. How about the return on investment to investors? Do we have any statistics on this? I mean, it's pretty important. If we're going to grow the market, someone's got to make money. We can't live on subsidies the whole time. So what is it? What is the story here for potential investors?
Yeah, Emily, Ivy, would you like to take that?
Yeah, Andrew, thanks so much for your question. It's obviously a really important one, and totally, I guess, hear where it comes from, and yeah, it is very, very important. I mean, I think I would probably answer your question by zooming out a bit just from West Africa and looking at the market as a whole in sub-Saharan Africa. I think, Ivy and I are based in Nairobi, and what we see in the East African market is we are starting to get to the point where we are able to talk about returns to investors and able to sort of understand what that's going to look like. I think it's probably taken a lot longer than maybe we thought it was going to 5 or 10 years ago to get to that point, but we are starting to understand what that looks like. And I think there are some really important lessons to be learned from the slightly more mature off-grid markets, but I think it's also worth being quite realistic as well. So, in a market like Sierra Leone with incredibly low energy demand right now, and it kind of ties back to the previous question, we are also going to have to think about ways to increase that demand. So one of the recommendations in our report is about the sort of thinking about not just the policies around the SAS products themselves, but also around the appliances. Because right now, one of the factors deterring people from adopting electricity, if they're a first-time electricity user, is just the cost of running appliances on it. So thinking also about how do we reduce those costs to kind of create that demand, to increase energy demand, to create a real revenue stream, and to move away from subsidies and donor funding. I think, to be frank, in markets like Sierra Leone, I think we're a little bit away from that right now. Easy Solar would be the furthest along, and I think they're probably still, a little bit away. And I think in terms of returns in the market more globally, I think we're starting to understand what that looks like. We actually did a piece of work around a possibility of exits in the off-grid energy space, which sort of, I think what we're seeing is that we aren't quite at the point yet where we have a real secondary market. And so that is making it more challenging to really talk about numbers in terms of returns. So I haven't really given you a direct answer, but I think hopefully given some more context, which is adds to the conversation.
Yeah, thanks a lot, Emily. Okay, sorry, Shekan, go ahead.
Yes, I mean, maybe just share from the Nigerian experience. I mean, I agree for a nascent market, we still need some form of support. We need patient capital and more of impact investment. That's the major focus. Of course, return must also be part of the equation so that the market can scale and take a life of its own. I mean, that's sustainability. But I believe that the Nigerian market is beginning to move towards commercial viability. I mean, a market where every year customers spend about $14 billion just to power their generators, and at a very expensive rate per kilowatt hour. It's a market that returns should begin to look good. And I think the major issue that we have that has also stalled that has been the foreign exchange fluctuations. About a year and a half ago, it was looking very good. A great parity was beginning to look possible until the deregulation of the foreign exchange. So for me, especially if you deploy those technologies for productive use, my company will focus a whole lot on powering SMEs for productive use. So they use the energy to generate income, and they have the capacity to pay. And at the end of the day, they still return some profit to themselves. So that means commercial viability is gradually, creeping in. And I think that should also excite and interest potential investors.
Thank you. Thanks very much, Emily and Shegun. I think just to add there,
Chibu. Hi,
sure.
sorry to come at you people, but everybody else is back at the main meeting and we are way out of time. We were supposed to have gone back like 10 minutes ago. So please, if you guys can just finish up and find us on the other side, please, so that we can wrap up.
Sure. So I'll just quickly take the next question from Chris, and then we'll just move into the next the main session. Thanks. Chris, you can unmute yourself and ask a question.
Okay, thanks, Chibu. I'll keep it quick because it sounds like we're running late. First of all, thanks very much to Ivy and Emily. Really interesting and relevant presentations. My question was on the COVID relief funds which are coming in. Wondered whether you've had any feedback from firms. Are these funds, say the EARF and AFDB and World Bank funds, are they starting to help firms? Are you hearing any feedback on the impacts they're having? And then very quickly, thinking of your investment maps, who are the commercial investors in Nigeria? So are they international investors or regional? And are they only in Nigeria, or do they look regionally at West Africa more generally? Thanks.
Yeah, over to you, Emily and Ivy, just quickly in about 2 minutes if possible. Thanks. Emily, you're mute.
Ivy, do you want to jump in first?
Sure. To your first question, Chris, on what the AFDB, World Bank are investing, all we know is that they have already directed some funds to ACS companies and some initiatives on technical assistance, but there's no clear visibility on which companies specifically and which arms, so we cannot provide a direct answer on that. In terms of the investors within the space, it's a combination of international as well as local investors. We're seeing some of the local investors interestingly coming into space, such as Access Bank or Sterling Bank, like local banks. But we're also seeing specialized investors such as Signfinder, Responsibility, early stage investors such as Ola, and crowdfunding investments such as BetterVest, and more later stage investors such as Helios, who are more internationally oriented and cover across the continent and the world. So there is a very diverse pool of investors within that space. Emily?
You're on mute, Emily.
Yeah, no, I don't have anything specific to add on those points. I think Abby's covered it.
All right. Well, thanks everyone. I hope this has been insightful. Just that we would, I think we had shared our email addresses, but you can always reach us via our website, and we would share the investment map. And I'm happy to have any one-on-one with anyone further. So thank you very much, Emily and Ivy and Shegun, and thanks everyone for joining. I think we're just moving to the next session to wrap this up. Thank you very much. Bye.
Thank you. Thanks everyone. Bye-bye.
Yeah, well.